When you are determining the probability of default, you have to capture all scenarios. You have to capture time value of money, reasonable and supportable information without undue cost.
We should have variety of knowledge. In enabling the business reporting, CFO should have learned all these aspects. What those?
Because you compare the current market value of the group. So current market value of the group including JV means only the 60% portion of the JV and without JV. So you got this 1778 value.
Maybe spot rate, maybe average rate, whatever. But with the approval of the Commissioner General, you can go based on the specified transaction. If the Commissioner General says, okay, go by the end of the year.
48,950 Canadian dollars. This is a down payment to buy a house, my friends. This is a down payment to buy a house. I'm telling you.
100% student. Probability of default 100%. Why? We are almost at the default stage. The probability of default is what is the probability that customer might goes to default bucket? What is the probability that customer might goes to stage 3? What is the probability that customer is defaulting? So if the customer is at stage 3, already he has defaulted, it means the probability of default is 100, already defaulted. Come to here. Now we are at stage 2, not still we are going to the default stage. Now what is the probability of default? So let's say it is 75, it is 75. So we have a loss event but still not defaulted, but the probability of default is there.
People must be known by you. Now that is the theory, that is the intention of Sri Lanka in introducing this particular subject. Now I am coming into another important point. So now you may be thinking that summary of the corporate governance, because I have worked with many PLCs as a partner of an audit firm, and also I have done many assignments under the advisory division and for the PLCs, including the governance certification or governance application, and day-to-day life we meet up with the governance issue. So therefore I will be able to share with you a lot of experiences that I have with regard to the governance. What are the common weaknesses, common cases in Sri Lankan PLCs, not only Sri Lankan, but global cases. Global cases, there are so many, because when there is a governance.
So when it comes to T, I told you, look at the immediate percentages. 40 and 30, 40 and 30. Look at the immediate percentages. 70. It is going to become the you think logically what is happening? Through S, P can significantly influence 40% of the shares of E, and directly they can influence 30%. That 40% and this 30%, it will bring you more than 50%, it will bring you control over it. Effective holding and NCI. When it comes to S, not a rocket science, 90% and NCI 10%. When it comes to T, we have to compute 90% into 80%.
Because we are mainly talking about the business reporting of the CFO job role, what the internal control will be very much important at the preparing the financial statement, and out of that what is the information technology control and internal control of preparation of group financial statement or a consolidated financial statement, because anyway you are learning the consolidation under this particular subject. You can see now financial reporting and the auditing part, there is a link. One side you learn the financial reporting and the remaining part is coming under the auditing to support you, support the financial reporting, right? And when it comes to examination, so there will be a
10% rate, while they will get the SLIBOR plus 1%. Now see the total is how much? Anyway, SLIBOR is coming. SLIBOR is coming. And here SLIBOR plus 1%. So more than SLIBOR, you need to anyway pay 1% and here 10%. So which means now total is how much? Now I see. See carefully. Understand the logic. if the company is not swapping, without swapping, the total is LIBOR plus 12%. If the company is swapping with swap, the total is LIBOR plus 11%. So are you seeing a gain here because of the swap? Yes. In this case, cost of equity equals to what? Cost of equity equals to WACC. Why? Because no debt is there in the company. So what is the beta? What should be the beta factor in this situation? Do you need to calculate again? No. Why? Because you already calculate something called ungearing. Ungearing means what? Equity 100% company. Ungeared company means you don't have debt here. So whatever the beta you got here would be called as what? That is the beta of this company after P. Your purpose is to generate income to the bank, but income will be generated from second year onwards. So it's clearly you have incurred in the production of income, your expenditure. So there is no deeming provision required here. Deeming provision required if it is not incurred in the production of income. It is clearly incurred in the production of income, but the income will be generated from second year onwards. Here be your benefit. Understand? Generally, if you forget about the formula, what is the benefit? Actually, this is the benefit. But for tax purpose, they consider only 50%. Audit financial statement based on IFRS. Now this is not permitted. This is not permitted. What is permitted then? In the case of a person conducting a banking business. Let's keep this question aside whether a leasing establishment is in a banking business or not. It's a debatable subject, but let's keep it aside for the debate.
When you're doing this, I mean, if you don't get the hang of this, you can make a මේ වගේ පිච් එකක් ඔළුවේ වැදුන්නේ නැත්නම් මේක ටිකක් අමාරුයි. This is why I keep on when I'm discussing මම මේ pictures පෙන්නන්නේ ඒක හිත. So the company started its business way back in 75. මේක නම් කවුද පටන් ගත්තේ? Essential goods, basically the goods that you have to buy on a day-to-day basis. So that's again the important word when it comes to use goods. The word day-to-day. I will write it down. Day-to-day. That's again. And then comes shopping goods. Shopping goods are goods that, well, before you buy, it's not something that you will buy regularly. You can හැමදාම ගන්න product එකක් නෙවෙයි. It's an important product which you will spend marginally a bit higher, but before you will look at the quality, you look at the quality, you will look at the price.
Onlineaccounting.lk